Hello, I'm Finola Burke from RaaS, and today we're catching up with NT-focused energy company Empire Energy Group, ASX ticker EEG. Empire Energy will soon be the only way to gain pure exposure to the Beetaloo, Australia's next major gas region. And joining me today to discuss latest developments is Managing Director Alex Underwood and my colleague Andrew Williams. Welcome, Alex and Andrew. And Andrew, I'm going to pass to you.
Thanks, Finola, and how are you, Alex? Nice to see you again.
Great to see you, Andy.
We seem to be heading into a critical period right now. I'm not going to call it just critical but exciting. There's an FID point on our first project coming up, potentially by the end of the year. I guess it'd be nice to know where the status is right now. What sort of needs to happen for you to be very comfortable around the feasibility analysis that you're doing, and sort of how much of what's remaining is sort of directly controllable by you?
Certainly. So we have a lot going on right now, and it's an incredibly exciting period for us. I'm growing increasingly confident that we will be the company that delivers maiden gas from the Beetaloo to the market, which would be an incredible milestone and really the starting point of what I foresee to be a very bright future for this basin and all the benefits that will accrue. So the starting point of us getting into this point of moving into a production phase and reaching that final investment decision from our board is an understanding of the potential for development wells to flow gas, and the work that we've been doing in-house and being done by the independent consultants in North America is showing us that this can be an economic development. So that's a very exciting initial step. But then there's a lot of work that goes on, first of all, in field development planning. So that's working out how many wells to drill, sorting out the surface facilities, so gas processing facilities and the workers' camps and the flow lines and all that. And we've now developed a pilot field development plan. So we're looking at most likely 3 development wells to be drilled next year that we would actually throttle those back a bit from what the peak rate that they could otherwise produce in order to fit the capacity of the McArthur River pipeline. So that's about a 25 terajoule a day opportunity for us. The other key commercial things that we're working on are, first of all, gas sales. So we've been having conversations with a couple of parties, but we are just about to now imminently move into a formal gas marketing process. I must say this is a very, very good time to be selling gas into the market, not only Australia's east coast, but also the NT. The supply issues occurring in the NT are unfortunately getting worse and worse. And gas security for the people of the NT it's not just about a long-term economic opportunity now. I think we need to get Beetaloo gas into the system, frankly, to keep the lights on in Darwin. We're very proud of the role that we're playing in providing energy security for the people of the NT and Australia more broadly. So there's gas marketing that's just about to kick off formally. We expect to be in a position in the not too distant future to knock down a contract and announce that to the market. Additionally, obviously financing is a big part of what we need to do. We are a relatively small company, and to that end, we will be we're talking to a couple of potential joint venture partners at the moment, and that can include players from Australia, North Asia, so the major LNG demand centres, and also North America, where there are obviously a lot of shale gas expertise and capital. But we're also looking at debt financing opportunities and other creative structures that I think really I've developed earlier in my career as a financier of oil and gas projects. So that's sort of all the commercial work that's going on and the technical and subsurface and engineering work. Then there's some critical approvals that we need to put in place as well. So The main ones are around regulatory approvals. We've got a whole bunch of different regulatory approvals ongoing at the moment, and I must say it's been a delight working with the NT regulators and our team. Really good level of mutual understanding and of trust and focus on the end game, and also critically moving our exploration agreement with traditional owners into a production agreement. So I'll be up in the territory in November, meeting with the traditional owners, and I must say, having spoken to some of them recently, they are really looking at moving into that next phase with us in true partnership. So a lot going on at the moment, and very exciting milestones coming ahead of us very soon.
Can I ask, just on one of the points you made in terms of the 3 development wells, is that going to be standalone new development wells, or are they likely to be maybe a reworking of the current Carpentaria drill inventory?
Yeah, so we have 2 horizontal wells that we have already drilled and flow tested. They are currently shut in, but it is certainly our intention just to bring those wells back on. So we wouldn't be doing any workovers or anything like that. We would simply just bring them back online alongside the new wells. The 3 wells I'm referring to would be 3 new standalone wells, highly likely that they would sit off existing well pads. And these would be your long laterals, lots of frac stages, targeting the Velkerri B, but it's likely that they'll be on a couple of different well pads. I mean, if you look at where our existing horizontal wells have been drilled, that location has been a really, really good location, particularly the Carpentaria 2 well. But also, you might remember we extended out into the Carpentaria East area recently with the drilling of the vertical Carpentaria 4B well. And that location is a couple of 100 metres deeper. And we've actually just done some more seismic reprocessing, which shows us some really good horizontal drilling targets off that location. So it's likely that these new wells will come off those 2 existing pads.
Okay, that's now that you brought it up, I guess, and it's very topical somewhat, given you'd be looking at the drilling, that the data that appears to be coming out of other operators has recently shown really significant reduction in drill times, and that would obviously translate to a lower cost on the drilling aspect. Deeper part of the basin, certainly higher pressure, higher temperature. Can we read, or does that sort of extrapolate into how you're thinking the quantum of improvements you might be able to generate sort of drilling through the Carpentaria area?
Yeah, so I must say it's been really pleasing to see great drilling results from our neighbours in the basin, Tamboran, with their joint venture partners, Falcon and Daily Waters Energy. The rig they brought in appears to be performing really well for them, and that is fantastic news. We have seen similar learning curves across the 4 wells in total that we've drilled so far. So each of our wells has actually cost about the same as the last, despite the fact that the first one was a vertical, the second one had a 1.3 kilometre horizontal section, and the third one had a 2.6 kilometre horizontal section. So we are seeing improvements in drilling efficiency as well. We fully anticipate that these learning curves will continue going forward. It's the learned experience across every single commercialised shale gas basin in America, but also it's the learned experience in coal seam methane. And I must say, one of the reasons actually we originally partnered with our operations team, Engage Energy, was that those guys were really some of the key people in coal seam methane who drove down the cost of drilling and completing coal seam wells. I think over their tenure working at Santos, they got the cost of coal seam wells down from about $5.3 million to $1.6 million over only a few years. In terms of the way we are modelling those forecasts, we are being relatively conservative. There tend to be these rules of thumb about a reduction in cost of about 10% for each doubling of activity. But certainly, once this basin really gets going, so multiple rigs, sand sourced in basin with the infrastructure around sand movement, really working out how best to utilise the water resources, and similarly having frac spreads in basin and supplies, I don't see any reason why we can't start to see the cost performance that has been achieved in the US. I mean, it'll always be a bit more expensive with, the high wages we enjoy in this country and the remoteness, but I remember in the Eagle Ford Shale, they were drilling wells for $15 million US in the early days. Now they're less than $5, and there's no reason why we can't do that ourselves. And it's about gradually going up that learning curve. So you've got to be very measured in the way you take risks as you learn, and we are very careful in the way we take those risks. But absolutely, there's plenty of scope for faster drilling. Less lead time between the drilling of each wells. Drilling in pattern drilling programs, so you're not mobilising and demobilising your rig each time. Getting in basin sand, and we've already identified sources of sand that meet our specs. This is going to drive down cost and ultimately improve the economics.
And Alex, you flagged that the success case looks like what it looks like for Empire in the past with commercial production as soon as 2025. I think you mentioned just before that you've already started to look at planning your to do some lock in some contracts. Where can you give us a sense of where you'll look to first? Obviously, there's a need for the Northern Territory, but do you also feel that you could actually concurrently have deals in place for the East Coast?
Yeah, certainly. I mean, we are going to be talking to pretty much the entire East Coast gas consumption market. It's more likely than not that our initial gas will go into more local markets. I mean, they are desperately short gas, and fundamentally, if you can deliver gas closer to the demand centre from where your source is, then it's just less transportation tariffs. But certainly in this pilot phase where we are limited by pipeline capacity, I see it being quite local. But I should stress that once this basin matures a little bit more, and that's part of what we're looking to achieve with this pilot project, that's going to give confidence to large East Coast buyers to lock in hundreds of terajoules a day contracts. That in turn is going to give confidence to the likes of APA to build the very large pipelines that will be required to connect to the East Coast. Bigger pipelines are just inherently cheaper because you're amortizing that capital investment across a larger amount of gas flow. And that means that it's just going to become increasingly attractive to deliver gas into the East Coast. And frankly, we really need it. I mean, where else are we going to get new sources of supply? We're seeing the Bass Strait dropping off a cliff. We need more supply into the East Coast.
Well, thank you, Alex, for joining both Andy and me today. We're looking forward to catching up with you over the course of the next 12 months to check on Empire Energy Group's progress.